Okay, good afternoon, traders, and happy New Year from me here, Nick Twidout, in the Sydney office. Well, uncharacteristically, it has been raining cats and dogs here in Sydney, so the cricket didn't go very far. But we're just settling into the new year here in the office, and quite predictably rather, markets have been pretty quiet. Now, there was a lot of anticipation on what's going on with China. There's been a bit of volatility out there, both with the currency and with the stock markets. Now, the Shanghai Composite actually opened about 3% down, and people were looking for that to continue on. But fortunately, it's actually rallied quite nicely and has recovered. It's now up 0.5%. So I'll just flip over to my stock market, and that's led to a bit of a recovery across the board. Everyone thought possible, and showing here ASX is still down 1.5%, but looking across the rest of the board, there's the Nikkei, that's pretty much flat, and here's the composites. There you go, 0.8% up and 0.41% up on the Chinese. Now, just whipping across, I suppose the main currency we were looking at really was dollar yen for some pretty volatile movements. It's sort of settled down a bit really. So a low down here around about 119, but it's recovered all the way back up to 119.70. We're staying away from it in the middle of these ranges. It really is getting dragged about by some fairly hard moves. Don't forget, liquidity is still not quite back in the market, I would say, and probably will just be coming in as we move into the end of this week. The market's certainly looking to get going, and levels are becoming prevalent. So dollar yen, obviously, he's had a nice move back from the start of the year. Highs up near 120.40, been down to 118.70. So probably if you guys looking to get short on it, maybe around the cloud coming here, or certainly I'll be waiting probably for it to get nearer to 120. Looking across the rest of the currencies, it's actually been fairly quiet. There's that recovery in the Aussie. A lot of selling on the anticipation of more collapsing through China, or more negative stuff out of China. But a bit of a recovery, back above 72, the figure, having been all the way down to 71.50. Looking ahead into tonight's European session, there's a couple of fundamental data releases to get stuck into. I suppose the biggest one being construction PMI in the UK. We've got some unemployment numbers as well in Europe, both the Spanish and the German. They come out at 7 p.m. and 7:55 Sydney time respectively. 8:30 p.m. Sydney time really is the big one, construction PMI. Expected to come out 56.1, so have a little look around there. Previous was 55.3, so certainly cables looking a little bit offered. Not really in any decent levels for my own at the moment, but it might give you a decent trading opportunity. Later on in the evening, you move in, you've got CAD, and for the Kiwi lovers out there, the global dairy prices come out. Once again, there's no direct time for that, but it will have an effect on the Kiwi. Kiwi's been not untradeable, but certainly had its usual sort of ups and downs over the holiday period. I've personally stayed away from it. But certainly we'll be looking for maybe a clue from this. This might be the first bit of fundamental data we're getting out of New Zealand for the next move in the Kiwi dollar. So keep an eye out for those things. But certainly I'm not looking to throw the kitchen sink at the market yet. Just get back in the sort of vibe, have a feel of how the markets are doing. Obviously there's a little bit of movement after the Chinese stock markets, the Nikkei. Keep an eye on the stock markets. They still are dictating some of the moves in the currencies as well. But look for your levels, get your charts drawn up, and I wouldn't go diving in with both feet just yet. I think the liquidity is still coming back after the whole holiday season. Okay, guys, have a fantastic day. Good luck to you, and personally from me, good luck in 2016. I've got a funny feeling it's going to be a much better trading year than 2015 was, certainly with some of the signs we've seen already. Cheers, guys, and speak soon. Any queries, come straight to us in the trading zone. Thanks.